Welcome everybody, I'm Stephen and I'm a popular investor on eToro. Again, thank you very much for listening to this video today, and as usual, please don't forget to like this video, take the time and subscribe to my channel as well. That will be really awesome and it gives me an opportunity to be able to reach more people. So thank you very much. So in today's presentation, I'm going to be talking about the main things that happened in the market last week, and I'm also going to be talking a little bit more about my strategy and some of my portfolio movements. So just to wrap up last week, our portfolio was down a little bit, under 1.11% for the week. However, if we compare that to the other benchmarks, the Nasdaq was down about 4%. The S&P 500 was down about 3.4%, and Bitcoin itself was down about 2.07%, and the altcoins were down a little bit more than that as well. So our portfolio outperformed the major indices last week, although being down. And the main reason for that was that China performed really well in our portfolio, and some of our Chinese stocks, which had previously been affected by COVID-19 lockdowns, have really started to rebound the last few weeks, as the Chinese government have really starting to put in plans to have a reopening after COVID and to relax some of the restrictions that were previously in place for COVID. So this has been very good for our portfolio. But generally last week, the US markets were down, the European markets were down. However, the Chinese market performed very well. There's also slight weakness from BTC. We've had quite a lot of ranging and quite a tight range over the last couple of weeks since the FTX collapse, and that has continued, but it was down slightly last week. I also did a lot of short-term trade positions in currency pairs such as ZAR against JPY, which is South African currency versus the Japanese yen. Also, I did a short-term position in oil and numerous short-term positions in natural gas as well, in order to be able to try to reduce some of the volatility in our portfolio, and also being able to go long and short oil and natural gas does help us to book in some profits as well. I also did some, took out some new positions. Anyone who listened to my video last week will know that I did close several of my long-term positions last week. And I did have some spare cash in our portfolio. So I took the opportunity recently to take a new position in Salesforce, as well as Zscaler and Zim Shipping. So these are new positions which have been added into our portfolio over the last couple of weeks, and they are stocks that I have a lot of long-term opportunities in them, and I think that they'll be very good for our portfolio moving forward. A lot of those have suffered over the last few months, and I see a lot of asymmetric upside to these stocks. I'll talk about those in a bit more detail in my end of year presentation. If we look at our portfolio on a 2022 benchmark perspective, our portfolio is down about 34.28%. If we compare that to the Nasdaq, that's down about 29.7%, and the S&P 500, which is down about 17.5%. Bitcoin is down about 63.48%, and other altcoins, a lot of them are between 80 and 90% down. So although our portfolio is trailing the major US indices, I think that we've actually had a reasonably not too bad of a year, considering that we have quite a high proportion of cryptocurrency in our portfolio, and we do have a lot more upside opportunity than those indices, as has been witnessed over the last couple of years previous to this, where we have made very strong gains, and I can see us making very strong gains in the future. So thank you very much for being patient with the portfolio, and I'm very confident moving into 2023 that our portfolio should receive a good boost. As we talk about the main news from last week and what happened, the US stocks dipped, and it was one of the worst dips for the last kind of 5 weeks after we've had some relative strength over the last month or so. And that was mainly because some of the data that came to the PPI data showed a 7.4 year-on-year basis versus consensus expectations of around 7.2. So it was a little bit higher. The key thing to watch out for this week is that the CPI figures, the CPI inflation figures, are released today on Tuesday. And also there is a Federal Reserve meeting, FOMC meeting that's taking place. And we will see the release of those inflation figures, which have been much anticipated. And we will also see how the the Federal Reserve respond to these inflation figures. It's at the moment, it's perceived that it's quite likely that we are going to see a 0.5% increase in interest rates, which is a slowing. It will be the first slowing of interest rate hikes since the interest rate hikes began towards at the beginning of 2022. So this is seen as a good sign. This will be seen as a good sign in the market if we do just rise. The interest rates do rise by just 0.5%. And then it's seen that it's quite likely that after that, at the next FOMC meeting, it could move down to a 0.25% increase. It must be known that interest rate rises do have a lagging effect. So a lot of the interest rate rises that we have seen recently may not be fully impacted in the economy yet, and we may see that over the next coming months. So it's quite important that we see a reduction in that CPI figure in order for the Federal Reserve to reduce some of their hawkishness in the market. However, we did see last week, we saw JP Morgan Chase and the CEO, Jamie Dimon. He told CNBC that he expected a mild to hard recession that may hit next year. This wasn't particularly helpful for sentiment, but it is a view that some financial organizations have in mind at the moment. We also saw oil prices have actually dropped last week to the lowest levels since January 2022. We all know that oil prices went very high at the kind of mid-level of 2022, and we saw oil prices reach about 120. They've now reduced quite significantly to around the $70 mark. And that is mainly because of a drop-off in demand, which was really intentional, because if you increase interest rates quite severely over time, then it's quite likely that demand drops off. And when demand drops off, energy prices do reduce as well. So this is generally quite good for upcoming inflation figures and data that may come into play. We also saw revised data that showed the Eurozone economy has expanded by 0.3% in the third quarter. And that is actually up from an estimate of 0.2%. So that does show some buoyant movement in the Eurozone in terms of the economy. We've also, in addition to that, see Eurozone retail sales in October posted the biggest monthly drop this year. So you're seeing a little bit of a contradiction in some of the data that is appearing at the moment. However, as was expected, house prices in the UK have dropped for a third consecutive month in November. And actually, this is the fastest pace of a drop since the financial crash in 2008. This to me was quite expected. as the interest rate and those mortgage rates have increased quite significantly. It's put a lot of people off moving. So there's a lot of less demand in the market for people to buy new houses as interest rates are very high at the moment, and many people have those kind of fixed mortgage rates on their existing properties, and it really just isn't a good time to move. We're also seeing Chinese officials announce a 10-point guideline to their new COVID control measures. This is really good because this now allows people to be able to quarantine from home if they have mild symptoms. There's been a big vaccination program for the elderly, and now they're reducing the mass testing in many cities. So this is kind of the first level of new COVID control measures, which are less stringent and a little bit like we saw in the US, Europe and the UK about a year ago. These are now starting to be put in place in China, and I think that there was a lot of protests in China over the last couple of weeks, which put pressure on the government. We also saw big suppliers such as Foxconn who were really protesting about this, and they put some threats in that saying that it was going to severely affect the Chinese supply chain if the government continued with the COVID-0 policy. So this is very good for the economy moving forward in China. And I did actually expect this for our Chinese stocks, but I expected it much earlier in the year. I think China surprised me a little bit by continuing with this COVID-0 policy. I thought they would have opened up a lot quicker, but now we are starting to see that, and this is really good for our Chinese stocks in our portfolio. And we've had some big increases in Wynn Macau, for example, as well as Haidilao, Alibaba and JD.com. As we move on to our top 3 performing stocks last week, and it is no surprise that our top 3 performing stocks last week are all Chinese stocks. And it's not much different from last week, to be honest. And the top performing stock again is Wynn Macau, and that was up 38.68% for the week. Wynn Macau has actually risen by over 110 or 120% over the last couple of weeks. Again, mainly down to 2 reasons. So one of them is that the casino license in Macau was extended, which was really good because the market had started to price in some, potential difficulty of that renewal of that license. However, it was renewed. Second reason as well being that obviously the economy is opening up in China. COVID restrictions are reducing, which is very good for casinos and mainland Chinese people visiting casinos without having to go through any isolation period. So this is very good. Second best performing stock last week is Haidilao, and that was up about 8.15%. Haidilao is a Chinese restaurant chain that sells hot pot dishes and experiences. And obviously they suffered a lot in 2022 during COVID restrictions, and this led to slowing growth in the Haidilao chain. However, the opening up of the economy and the less stringent COVID-19 regulations makes it much more likely that people are going to go out and visit restaurants, and that we could see some growth again. So there's been some really good growth. Haidilao, and that was up 8.15% for last week. The third best performing stock for last week is the Fosun Group, and Fosun Group is a large conglomerate of Chinese companies, a little bit like Berkshire Hathaway in the US, and that's made up of companies in pharmaceuticals, leisure, tourism, even football clubs, oil and gas, lots of different sectors in there as well. And Fosun Group was up about 7.73%. And because Fosun Group work over a number of different industry verticals, obviously the opening up of the economy is very good for Chinese stocks, and in specifically Fosun Group. So as we move on to our Death by Charts edition, and I just wanted to go over the first chart, and this is the US producer price index. As you can see, it kind of hit that peak of the US producer price index in March 2022 and has actually gone down fairly significantly. It's actually gone down over the last couple of months. So we're seeing a reduction in the producer price index. The second chart to the right is, as you all know, earlier on in the year, there was a big increase in the cost of second-hand cars, and that is mainly because the production of new cars got slowed down because of a lack of semiconductor chips and the Chinese supply chain bottlenecks that were in place. And as you will see now, there has been a significant dip in used car prices over the last 12 months. So we've seen a reduction of about 14.2% on used cars. So this used cars was a big component of the inflation figures at one point. So as we've seen house prices go down, we've also seen used car prices go down. Fertilizer costs have gone down. This should have a positive effect on future inflation numbers. Third chart I just wanted to show is the US Strategic Petroleum Reserve. And obviously the oil and natural gas prices make up quite a large portion of the inflation figures as well. You will see that this year we have had a significant drawdown of the US Strategic Petroleum Reserve. And they keep this US Strategic Petroleum Reserve to make sure that there is no supply constraints and that the US can always get access to petroleum when they needed it. And obviously there's been a big usage of that Strategic Petroleum Reserve this year, mainly because of that war between Russia and Ukraine that has taken place. And there's actually been a change in the Strategic Petroleum Reserve by about 34.8% in 2022. And there was about a 7% drawdown on that as well in 2021. So this could be seen in a couple of different ways. So one of the ways that it could be seen is that the US have been removing some of this Strategic Petroleum Reserve in order to lower the price of oil for the US consumers that had got really expensive. However, the one downside of this is that they have less now in their Strategic Petroleum Reserve. So if they need that in 2023 and 2024, they're going to have much less to draw upon, and this could possibly have an effect on price if demand of oil stays the same or increases. As we move now to our crypto news and views, and Bitcoin really has stayed relatively stable over the last few weeks, and it's sitting at just around the $17,000 mark, and it has stayed quite stable ever since the FTX collapse that happened about a month ago, and we are really seeing kind of a tight range. And I think a lot of people are waiting to see what happens and have waited to see what dominoes may have fell during that time. And we obviously saw BlockFi that came into struggles, Voyager, and another couple of funds as well that were affected by FTX. And I think that the longer we kind of stay in this range, the more likely we are to see either a snap up or a bounce down, depending on if there are any further dominoes to fall. But I personally think it would take a much larger bankruptcy from one of the large crypto firms in order for that price to kind of drop significantly below this point. I do feel like we've either hit the bottom or at least very close, and actually this is probably I think in January, this becomes the longest bear market from peak to trough since the start of Bitcoin. We've already surpassed that of the bear market in 2018. So I think we are due a bounce back in crypto, and I expect us to start to take on a higher range if we have actually hit that bottom. We also saw Sam Bankman-Fried. He's finally been arrested in the Bahamas, and he is waiting extradition back to the US. He's been involved in a lot of interviews recently, and a lot of people say, well, why is this guy not in jail? Finally is in jail, and justice is starting to be done. So we're waiting for that extradition back to the US. And really, him being jailed kind of starts to draw a line under what happened with FTX. And you see that some justice has been done. And it's about time now that the market started to repair itself and kind of move on. There was also some news last week that the Block, which is a large news outlet in crypto, raised money secretly from Alameda last year, and the CEO didn't declare it, and he has now stepped down from his position. Lots of rumors going around about why Sam Bankman-Fried would provide a loan to the Block, and a lot of people are saying it could be because they wanted to get favorable news from the Block about Alameda and about FTX. However, that is kind of being investigated at the moment, and I find it quite interesting that the Block editorial team are starting to investigate what actually happened and publish those findings as well. So he has stepped down. Quite likely that the Block will probably be sold off to another investor. We also seen Neon Labs, and this is a launch of Neon Labs, which allows Ethereum applications to build on Solana, has just gone live. And this really just allows Ethereum compatible applications to be supported on Solana. So I think this is generally pretty good for the Solana blockchain moving forward. Also seen Nexo, which is a crypto lender, and they are very popular in Europe, for example. However, they did have a US business, and they've decided to depart from their US business and slowly pull out of that US business. And that is because that they said that there's a lack of regulatory clarity around Nexo, around the crypto laws and regulations in the US. We also seen a lot of FUD around Binance this week, and that there was an audit by Mazars, and there was a little bit of information that has been highlighted in that kind of audit. And one of the pieces of information that was highlighted is that they aren't 100% collateralized by users' assets on the platform. From that audit, they showed that I think there was only, it was very small. I think it was only about 3% of the crypto was unaccounted for. And I think with all that's gone on with FTX and other exchanges, you can see why people are a little bit more skeptical than usual. However, there wasn't a massive difference between the amount of funds held by Binance and user funds. So we'll see that play out over the next couple of weeks. But I'm a lot less worried by Binance's activities than FTX's, but you can never fully trust any exchange. So if you do hold significant funds on Binance or any other exchange for that matter, it is very good to own your own private keys and try to get those into a cold wallet where you own the key. We've also seen the 𝗱𝗶𝗀𝗀𝗀 protocol has acquired Web3 social gaming app Sona, and this helps to further expand the Lens protocol and their reach. So this is pretty good for the 𝗱𝗶𝗀𝗀𝗀 protocol. Onto a Bitcoin chart, and I wanted to show you this kind of potential Bitcoin bottom indicator. And if we look at previous kind of bear markets, what we've seen is the last 2 times the RSI has entered oversold areas, we have stayed there for 395 days and broke the AF 580 days after the RSI left those oversold areas. So you can see that from the chart. But the reason why I'm showing you this is where we are today. And we are there again, and 395, and it will be 395 days this month since we broke that. So this could be a very good bottom indicator, and we could start to see a bounce off those lows, and we might start to see a bit more volume as well going into Bitcoin, and could start the next leg up, which could then start a new range. So I want to thank everybody for listening to this video today. Don't forget to join my Discord group if you haven't already. Really awesome community of people regularly discussing about the markets. I'm always there to answer any questions that you may have as well. And thank you very much for being patient with the portfolio. And within the next couple of weeks as well, I'm going to do an overview of 2022 and explain about our overall performance and go into a lot more detail on the strategy, and also the stocks that we're holding, the crypto that we're holding, and why we are doing that. So thank you very much and have a great week ahead.